So today I'm going to talk about a UK stock that I own that crashed 20% today, and I'll tell you if I bought, if I sold, what I'm doing in that position. And it's a bit of a surprise. I would have never expected this stock to drop this much, but there were some surprises this morning, and today we're going to talk about that, and I'll also give a mention to a few other things that are moving in the market anyway. So if you enjoy it, hit the like button. If you're new around here, subscribe. Let's get started. So the stock we're going to talk about today is Card Factory. I'll get onto that in a second, but a little shout out to Alibaba. I don't know what's going on with Alibaba at the moment, but it's really starting to kick on. It's been a cracking year, really, when you look at it now. Up 20%, which is pretty impressive. Yesterday was up another 2%, pre-market up another 5%. Might be worth an Alibaba video at some point. PayPal is also doing very well. It was up 1.1% yesterday. Today it's nearly up 1% in pre-market. It's getting close to the $80 range. We're going to maybe talk about PayPal at some point this week. Let me know if you want to see it. A surprising thing that happened on the UK market, Alphawave. I don't know if any of you guys used to remember this, but I used to own Alphawave. I eventually sold out the position. I sold for a good profit, and then the second time I think I got out break even. I sold because management would give me some red flags, and I sold it. And yesterday I thought that was true. I looked at the update yesterday and I thought, yeah, the management are trying to pull the wool over the eyes of investors at the moment. But the big surprise that happened yesterday, and you won't even be able to see it on the chart because of where it closed, but yesterday it went from being a £1.11 stock down to 70 pence. And then it went more than that. It went from a £1.30 stock down to a 70% stock, nearly half its value. And then yesterday it basically nearly recovered a lot of it, and it was only down a little bit from its drop. I mean, it had like a 15% drop yesterday, and I was looking at the numbers that they did and they were terrible. Like, gross profit was down by nearly half. They went from an operating loss of 2 million down to 48 million, and I was like, that's the downgrade, the guidance as well, once again. I mean, I don't know how many times that's happened, and yet the stock was down. But to say the stock was down like 40+%, and then it only ended up being down like 15% yesterday, that was crazy. Like, there's been some weird movements in the UK stock market. And I was looking at Warpaint. I mean, Warpaint, it had a bit of a good day yesterday. Probably the reason why is because it came out that Courtney Rebel 3x'd his position, and all the momentum traders that followed it in probably bought the stock as well. But before yesterday, the stock was actually down in the last week, and in the last week the stock reported a 67% increase in the EPS, and yet the stock was down. Like, how do you value a company less after it's just increased its EPS by 67%? I don't know. I was just looking at the stock market yesterday and I was like, what is going on out here? Like, between Alibaba, PayPal, Alphawave. I don't know how Alphawave was only down that much when I looked at the numbers. And then you had Warpaint increasing its EPS by 67%. And it was down for the week. It was shocked. And then obviously then we got hit by the Card Factory news this morning. I was like, Card Factory's even down 17% now. Like, things are going down that don't make sense, and things are going up that don't make sense. But anyway, let's get on to Card Factory, because obviously that's what the video is about today. So yeah, a bit of a shock. Stock is down 17%. Basically all the gains that it's had in like the last kind of couple of months, as we saw that the institution that had been dropping the shares had sold them all. A lot of momentum traders came in. Since then it has dropped, and going back close to where it was before that price. Not exactly close, but you know, year to date it's still up 13%, but you would hope maybe a little bit more. It does trade at 8 times earnings at the moment. We'll see what happens where the profitability kind of ends towards the end of the year. But look at the numbers. It started off well. Revenue was up 5%, or 5.9%, nearly 6%. Yep, good. We'll take that. EBITDA was down 11%. Okay. This is where it came in. The profit before tax down 43%, and the EPS down 46%. Now that was a shock. That was a shock to see profitability down that much. We had been warned that there was going to be some impacts going forward on the profitability, especially at the first half of the year. But I don't think any of us expected it to be this much. And I think that's what really shocked a lot of investors at the moment. Now, they put it down to a lot of things, including investments, freight inflations, higher taxes. The big thing was the national living wage, and also just the increase in wages in general. Really dug into the profitability, and when we look at what they're going to do, they do believe that the company is going to recover this in the second half of the year. Listen to the conference call. I asked a question about on the conference call about potentially how are they going to manage that sort of increase in wages, which I think if I look here, yeah, you can see here store and warehouse wages went from 53 million up to 64 million. That's basically if you go back to where we were at Obviously, there was nearly a 8 million gap there. A lot of the, as you can see, the storehouse and warehouse wages, that's where a good chunk of that big gap in profitability kind of came from. But they said they're going to do this through a few things. They're going to be entering the second half, which, as you know, as a seller of cards, the peak time is Christmas cards. So volume will help the margins when we get into H2. They said that they're going to be also doing higher products, higher margin products, more like luxury cards, higher costing gifts, and profit margin will expand because of that. They also mentioned, and it wasn't really obvious here, but they also mentioned potentially the passing some of that on to the prices and increasing the prices, which they could potentially do, and just overall managing the costs and some new partnerships that they have coming in. So it looks like they have a game plan on how they're going to manage this into the second half of the year, and they said that there is no change to the financial year 27 target. It's also worth pointing out that actually at the start of where they posted this is they said that the full year expectations are unchanged. So there's no profit downgrade in the full year guidance after these numbers. So make of that what you will. But there was positives. Gifts and celebrations grew 6%, which has been very strong. Obviously, they higher margin products as well, which is what you want to see. I actually think I have a slide somewhere down here that I'm just going to jump to. So if you've been into Card Factory recently, you'll be able to see, like, sometimes you go in and there'll be soft toys and confectionery and Disney license ranges, which is up 17%. You sometimes go in and you'll see, like, for example, like Spider-Man balloons, and you can go buy them Spider-Man balloons, which is good. They're growing really well, and obviously them higher margin products hopefully lead to more profitability. That's something that is doing very well for them. Also, some positives is that they did do the interim dividend, which was 1.2%. So I think that puts Card Factory at the moment towards like a 5% dividend yield, which is obviously really nice, because even if the stock doesn't do anything, you're going to be collecting a nice dividend. Double check that though. That was quick maths on top of my head. They did sign a multi-year agreement with Aldi to sell, to be the exclusive greetings card supplier in Aldi and Republic of Ireland. I'm surprised they didn't make a bigger point of this. They did say they are going to enter the US market. They have secured a nationwide wholesale retail partnership. They said they're going to give more details in, I think it was like 4 weeks time or something like that, which they didn't really give too much detail in on the conference call. I've got to say, for management team, I feel like potentially they missed a trick here. Obviously, everybody was going to be staring at the profitability numbers. Maybe do a separate press release. Don't mention it in this earnings report, and then do a separate press release, like in 4 weeks' time. That would probably be my suggestion. And also, then you could give more details of like who it's from, how many stores they're potentially going into. I think maybe they should have kept that a little bit separate. But obviously, once again, good expansion through these, third-party outlets like Aldi. Obviously the US expansion now. Who would have thought Card Factory selling the cards in the US a few years ago? Advanced discussions to renew the multi-year partnership with the Reject Store in Australia, which is obviously good. And also in September 2024, they completed an acquisition, which is a wholesaler ingredients card in the Republic of Ireland. So yeah, you can see here, the international growth is really, I think Card Factory is like a bit of a ceiling in the UK now. They keep opening up a few more stores. But these partnerships are going to be the key drivers for them. And what we saw is they did, once again, sign some more key partnerships, which is really good. Online Card Factory growth was actually really good, up 8%. Getting personal was once again a little bit of a drag on the numbers, but I'm fine with that. I think they should really just sell off that brand and cash it in if I were them, and then use that money just to pay off some of the debt on the balance sheet. That would be my suggestion, but hey, it's their choice. Also, you might have seen this already. They did launch a partnership with Just Eat to do delivery of like gift bags and cards, through the Just Eat platform. That's with 19 stores in the UK, and obviously we'll see if that is successful. I don't know how many people are going to order a Chinese and a greetings card, but we'll see what happens. But hey, loads of people do things now to avoid going out the house and interacting, so it might be successful. We'll see what happens with that anyway. But looking at the numbers really, and my overall opinions, it did make me laugh when they got the classic and weather was also pretty bad line in the any results that are disappointing. They always put the weather was really bad. I agree. To be fair, I remember June. June was like the most depressing month ever. It just rained all the time. But it always makes me laugh when the weather always gets suggested in any of these companies' reports when the numbers are a bit disappointing. Overall, my thoughts are with the companies that there was really a lot of positives, but it's all been overshadowed by the drop in profitability. And we did have the warning that this was potentially going to happen. I just don't think any of us expected it to be this much. And I think a lot of people have struggle believing here that they're going to get to these full year expectations, which they say are unchanged at the moment. Because when you look at the drop-off, you're going to have to see some big improvement in the second half to recover from these numbers here. I think a few people are just like, we don't believe you. And I think that's why the stock sold off today. Long term, I think there were some good partnerships announced with the business. And I think long term, it might be okay. I think management maybe, they knew they were going to get impacted a little bit. And I think maybe management have been a bit slow to adjust to the higher costs. And I think now they've kind of gone, oh crap, these are actually quite high. And now they're starting to adjust to it. I think maybe management have been a bit slow to adjust to that. And it happens sometimes. But I'll tell you something, if they do get a rebound in the back end of the year, if they do start seeing these the cost efficiencies starting to kick in with, you know, the volume amounts from these deals kicking in, if they go, okay, to get back to the levels of profitability we're doing, this is how much we need to increase the prices by, we increase the prices, the gift selling, the higher margin products start coming in. If it does rebound by the end of the year, I think a lot of us will turn around today and go, I wish I bought on that 117p when that interim results came out. I think that's what you're probably thinking. But I can see why the stock dropped today. Because obviously, you know, maybe we were expecting a bit of a profit drop, but we weren't expecting this. And I think a few people are looking at that full year unchanged today and going, I don't know if I believe you. The worrying other line that was in the report as well is that the outlook was trading since the period has been in line with the first half. Well, the problem is that the first half, you know, is that just the revenue or is that revenue and profit? Because if it's profit, that's not good, because obviously we want to see the profit rebound coming in by now, and you know, some of these efficiencies starting to kick in, and it's not. That would be the other concern, that it's continuing, and that was a line that was also a bit spooking in the report. So yeah, it's a mix. There's kind of two tales here, where it's like, I think the long-term picture is still okay. I just think we're all a bit shocked by the profit drop-off. And like I said, if they hit what they're supposed to do, it should do really well, and we might look at this as a buying opportunity. But I can see why investors are spooked today. So for me, I will buy the stock now. I will wait for another update. I think when we get the full year results, we'll be able to judge it a lot better. And if the full year results show weakness still, I'll probably then reduce my position size, and then if the results are good by the full years, I'll go, I probably should have bought more, 117p, but hey, that's investing. There's always that kind of like mystery work going on in the background of where they're roughly going to be at. The only thing that I do say is that I did make a little bit of a balls up, because only Monday, you know, I was back up 100% on Card Factory. Now I'm only up 60%, which is still very good. You know, it's key to remember that not to get too upset by it, because I'm still up a chunk on the position. But I slipped up because I probably should have took some profit off the table, and I didn't. That was probably the mistake that I did make. You know, over the last 6 months, it's still up 28%, so let's not get too caught up in today's movement. But yeah, a little bit of a mess up from me. But overall, I still think the picture is good, and I think the partnerships that they've announced today are even more positive for the longer term. But I think to have a more serious judgment of today, we would need the full year results to see, yeah, that was a bit of a blip, and that's probably a better judgment on where Card Factory is. And I think what we have today, another thing than why the stock is down as much as it is today, is that I think a lot of people that have jumped in the last month are just momentum traders, and that's why the stock is probably down a fair bit, is that they're all exiting the positions at the moment as well. So yeah, that's the video for today, guys. Hope you enjoyed it. Let me know what you think about Card Factory. You selling, you holding, you buying? Apart from that, guys, I'll see you in a bit.